Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, the US is completely random in its views on trade. Firstly, two reports from two different regional Feds showed differing business tracks. The one by the Philadelphia Fed revealed some gloss coming off their upbeat outlook in the heart of industrial America. The one by the New York Fed was more upbeat and remained near record highs. Meanwhile, the US is importing at a furious pace. Mexico and Canada are preparing for a NAFTA relationship without the US. It is on track very similar to the TPP, something the US now seems to want to get back in on. And the US tariffs on Canadian newsprint appear to be an own goal. Also badly affected may be aircraft manufacturer Boeing. All this from a president that just makes up his own facts, even when the data says otherwise. And staying in Canada, their national average home price was down 5% and sales volume was down 17% in February compared with the same month a year ago, evidence that many buyers there raced to purchase before new mortgage rules came into effect. In China, some major conglomerates there are in liquidity trouble. HNA has skipped paying for fuel for its airlines, and LeEco has failed to offload units in its planned reorganisation due to excessive debt, putting its viability in doubt. In Europe, industrial giant Unilever has decided to move its headquarters from Rotterdam to London. In Australia, their Royal Commission inquiry is delving into the gritty detail of some transactions, identifying about 5,000 at CBA that may or may not have issues over a 3-year period. However, given that CBA has more than 1 million residential loans and record high customer satisfaction levels, they seem to be arguing over the 0.5% at the margins. The real issue seems to be in the Australian predisposition to use mortgage brokers and their ability to control dodgy behaviour in that sector. In New York, the US Treasury 10-year yield is back up to 2.82%. Locally, wholesale swap rates will open noticeably higher today for the 1-year duration, up 4 basis points yesterday and now up 12 basis points over the previous 4 weeks. Rises of this magnitude will have mortgage bank managers thinking about pricing for 1-year fixed mortgage rates. And the gold price has slipped back today, now down $5 to $1,318 an ounce. Oil prices are up marginally today, with the US benchmark now just over $61 a barrel, while the Brent benchmark is just over $65 a barrel. The Kiwi dollar will start today 0.5 cent lower at 72.8 US cents as the greenback is back in favour. On the cross rates, run changed at 93.2 Aussie cents and 59.1 euro cents. That puts the TWI at 73.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.